Monday, February 27th, market analysis, Stan Ehrlich. Good morning. Good Monday. We have an interesting situation this morning. As you guys know, I start out with the S&P 500 all the time. It's my major go-to index. I think it's best index to use to describe the overall market situation. Although there are, in fact, idiosyncrasies with the Dow Jones and the QQQs, and I occasionally talk about the Russell 2000, etc. But the S&P is my favorite. So if you want to ask questions, email me at info@ersignals.com. Now, on the left is the 1-minute S&P. On the right is the daily, going back almost a year. This morning, we gapped up pretty good. And oh my gosh, it seems to be saving what I thought was a very damaging Friday, trading 100% below the neckline, closing below the neckline of the starting in June of last year, head and shoulder bottom formation. The head of the formation was October 13th, and then December 22, I believe, was the last shoulder low. And that on the right is this low, October 13th low, and the December 22nd low. On Friday, we dropped down to a support level at 393, which held, but I didn't want to get there in the first place. I wanted this market to stay above that green thick line, which is the neckline. Now, on Tuesday of last week, we touched it and closed above it. Wednesday, we went a little bit below it and closed above it. That's okay. Then it got interesting on Thursday of last week when we got a little bit more below the neckline and made a minor low for the dip down and had a bullish engulfing, which normally is very bullish. And then Friday, ouch, 100% of the price range was equal to or lower than the neckline, and it closed below the neckline, which again is normally very bad. This morning, so far, we seem to be saving the boat, floating it back up again. The low of the day just a few minutes ago was almost closing the gap this morning where we opened a few points higher and got all the way up, as you can see, to about 401.30. Now, the neckline is currently about 397.75, which would be okay if we came down to the low of 397 and a quarter, and that was the high of Friday. Today's low is so far approximately 397.50, and then it jumped right back up again after testing it twice. So what we need to keep this pattern alive is certainly not a new low close, and to say the least below Friday's low. I'm sorry, that would just kill everything. There's no way I could manage to make excuses for this pattern to be good anymore. I'm glad I've got what I've got this morning. I thought I was in a bad situation on Friday and have to go back to plainly support and resistance zones, trend lines, and so on, the usual tools. But I love a head and shoulders. They're my favorite pattern. I must have seen thousands of these things in the 52 years I've been analyzing markets from a technical analysis point of view. And I know them like the back of my hand, what they should do, what they should not do, what the minor exceptions are, and here we have one. I haven't seen an exception like this, and again, that's so far, in years. So we're allowed to close the gap, and that is a quarter of a point lower than today's lows to touch the high of Friday. But anything lower than that is very, very worrisome. So you have yourself a sell stop price range, a protective stop price range. You also have a price range at which you might consider being a buyer, which we're not getting away from too far yet. And that would be in the ballpark here, 398.75-ish down a point or so. The intermediate to long term, and there's a minor new high. The minor term long side objective, and I'll spread out the 1 minute here so we can see a little bit more detail. If this pattern works, and again, it's from June of last year to the last shoulder low of December of last year, pretty darn big. If it works correctly, it predicts a minimum bullish move to the all-time historic highs. And I stressed, as you heard, the word minimum. I've seen these patterns to double and triple and even more the objectives up or down that they produce. And I would not be a bit surprised if this one was going to do much, much better than just the test of all-time historic highs, which was of January 3rd, I believe it was, January 3rd or 4th of 2022. Now, again, it depends upon if we can maintain approximately above the range of Friday. That's it. So let's see what happens here. If you want to establish a long-term position, I would consider doing so real soon. Let's look at the DIA. Different story. Now we do have a head and shoulder bottom. Again, June is the first shoulder low. And by the way, both the S&P and the QQQ and the DIA for the first shoulder low in June was by itself a small head and shoulder bottom. It's a pattern inside a pattern. Not all that rare, but not that common either. For the head of the DIA, which includes October 13th, the major low for most indexes, and the last of a little double bottom over a couple of weeks for the DIA, that little patterns inside of patterns, worked great. And obviously the minimum upside objective was surpassed by a lot. And that's it right there, the minimum objective. And we went probably double or more as far as the amount of bullish move is concerned. Now here, the last shoulder is rather goofy. We've got that December, early December, mid-December low. And then we've got a couple of other lows that don't quite fit just right. But they're not really damaging any of the major rules involved. It's just a little bit larger shoulder than what we had back in May, June, July, especially the June low. The neckline does slant upwards. That's okay. Head and shoulder bottoms normally have a relatively flat to downward slanted neckline, but sometimes they're upward slanted like this one. So it's going to take quite a bit of move and a substantial amount of time, probably several weeks, a month or two, for it to come up to 351 where the line is now, the neckline is now, in order to just break out of this formation. So it's got a long ways to go. But unlike the QQQs, which we have on the screen now, it formed its head and shoulder bottom with, of course, its June 16th low, which again was by itself a head and shoulder bottom that worked great. And the October 13th low, which was, I reiterate, an incredible October low seasonal with a bullish engulfing, and because of the way it formed, it satisfied their criteria for my ER reversal. And it turned the daily price action green, and it was my official buy signal. I talked about this a month or two before it happened, and I couldn't believe how profoundly, accurately, fantastically it happened. If I made it happen on my own, I couldn't dream of a better way to go about it, including the retracement the next day back to the ER3. That was the little green dots buy area for the second ER technique. ER1 is always in a trade once it happens, the signal happens. ER3 waits for a retracement either up or down, depending upon the sell signal or buy signal. Let's take a look at the top here. And of course, it's the top on August 16th. it was a bearish engulfing and it was overbought. By the way, my RSI indicator in the subgraph below is a custom version of Wells Wilder's RSI, and I learned RSI from Wells himself. I've been on the internet, was on the international lecture circuit starting in the 1970s for about 30 years. What a hell of a great experience all over the world. Now, we're way, way above the neckline, which is the blue downward slanted line, and it's almost exactly parallel with the major bear trend line for the bear market of 2022. So they're almost exactly the same. So this retracement, which came down a little bit below the neckline on the spider, came nowhere near the neckline on the Qs. And the Qs have already, with their rally high on February 2nd, that was pretty much halfway to the minimum upside objective, which is 347 for the QQQs, approximately halfway up to its minimum upside objective. So this retracement that we have had for the month of January, February, almost the whole month of February, I think might be over, Friday's low. And I think we're starting to see the beginning of the rally that's going to take us into high ground. I have to say that. I have to say it at the very beginning if I'm going to look like I know what I'm talking about at all. Saying it after the fact is kind of like cheating. Anybody can do that. So far, so good. Now, as you can tell, I'm very bullish intermediate to long term and even short term at the moment. Short term, I wobble back and forth depending upon situations in a trend, which is normal. And I maintain at the moment all three being short-term, intermediate, and long-term friendly because of the low on Friday and the way that we're moving out of it today to the upside. Let's go look at futures. We've got some stuff that's brand new today. I'm going to start with the S&P 500 E-mini, which of course had the October 13th bullish engulfing. Like almost all of the other major indexes, it was incredibly good. I got buy signals all over the place. On that date, October 13th is going to go down as a whopper in years to come. So we got a bullish engulfing on Thursday of last week, which didn't work. But we were still oversold on Friday of last week when we dropped off to lower levels on a closing basis and did a little damage to that neckline. I didn't like that a damn bit. But today, we're holding, even on the break, around unchanged from Friday to higher. Now remember, the E-mini has a lot different trading hours, and therefore the price ranges are a bit different than the S&P Spider, and that causes a little bit different formations and different technical signals at times. It depends upon the way you look at it. But so far, so good today. I like what I see. I want to close above Thursday's high. That is a very important key for all of the indexes. Closing above Thursday's high would cause me to smile a lot. So that's it for the E-mini futures contract, which of course is also a stock market index. Let's go to the next futures contract. Well, I told you there was a buy signal on cotton on Friday. It turned green on the daily data chart, and we were able to come back into the middle of the range approximately. It's a mathematical formula. And the cotton this morning on the dip, and we bought very close to the low of the day, and is now almost at the high of the day where it opened, and very close to a high higher than Friday's signal, the bullish engulfing ER buy signal. Hey, so far it's working. I need to close above Friday's high. That would help a lot. It would be a new high and a new high close for well over a week. Excuse me. And I need for it to continue to get stronger and start to challenge the resistance areas at 87, 88 area. But I'm bullish. I like it. We're in pre-decided levels. This is an automated programmed technique that you can acquire and run on NinjaTrader, or TradeStation. Next, the buy signal we got in the bond futures market on Thursday didn't quite work right. I was optimistic that that was going to be the beginning with the other bullish engulfings in the other indexes, stock market indexes, that the bond futures were going to start to rally. That meant lower rates on a short-term basis. But today we're seeing a lower low and then a little bit higher levels, not doing any real damage, but not helping the story much. What I want is a close above Friday and Thursday's high, which are almost identical. And that would cause me to smile a lot. Now, granted, the green bullish engulfing ER buy signal didn't work exactly the way I expected, but we sometimes have them cluster. And I don't always get the highest high or the lowest low with these signals. I do frequently. Green on the bottom of that big bear move for a week, and that's plenty of time to make some money. This red sell signal didn't work very well. You can't argue with that sell signal. It's on the top for months before and ever since, and that was August 2nd of 22. This buy signal was smack dab on the bottom. Come on. A lot of these green and red signals are the high day and the low day for substantial amount of time before and, of course, more importantly, afterwards. Next chart. So I'm bullish on bond futures. I'm also bullish on 10-year notes. Now, the same story goes here. The buy signal on Thursday was not quite did not work quite exactly correctly. But we got oversold for quite a while. We're in a support area. I like the way it's acting in a general sense. I would not be interested in selling short. I would very much be interested in going long. I don't have my exact signal to follow, but there are other ways to go about this, and you can come up with something, I'm sure. We have a great buy signal for a week or so here. A fantastic sell signal again on August 2nd. And that was the last important ones that are really good. This one worked a little bit way back, April 12th, and that one didn't work at all. Now, when they don't work, don't get stubborn, don't get stupid, don't sit around and lose a lot of money. Our ER signal trading system, automatic system, always has a protective stop the moment we're in the trade. So we know where we stand as far as risk factors are concerned, and you can move your protective stop, or commonly called a stop loss order. But hey, these stops protect profits also, not losses. So I like to call them protective stops. You can move those protective stops anytime you want and get a feel for what input works the best for you. And that's what will move. It's not the same at all, but it's kind of like changing a moving average number. But it's not the same at all. Next chart, gold. Well, we were oversold and we still are oversold, not at this moment, but most of today. And with the lower low and a higher close likely, and maybe more strength coming into it before the close, we just might have a bullish engulfing if we can get above Friday's high. Might be asking a lot, but that's exactly what will happen if we get above Friday's high, because we're in oversold territory and we've already had the lower low. Now, we got a great sell signal at the top of this market on February 2nd. And when we do have these signals, I scream bloody murder on the day that they happen. That's why we're looking at these charts now. So it's important for you to realize that these signals, not always, but often produce whoppingly great, I don't know if that's a word, whoppingly, but great signals. Here is the low on a triple bottom, the first one that happened on September 28th. Here is a sticking out like a sore thumb bottom on a buy signal July 21 in gold. All right, next chart, natural gas. I told you we had a buy signal last week on Wednesday. It's been up every single day, Thursday, Friday, and today so far, with higher highs and higher close. Plus, Friday's low was right there at our green dot, which is one technique for entry for ER3. And we have a technique for entry for ER1, which is always, if it's red or green, in a trade. ER3 only gets into it if there's a little retracement. This is an example of a fantastic sell signal way back on August 23rd of 2022. All right. And that was the beginning of a bear move that maybe ended last week. Next chart. Wheat. We had a sell signal just last week. It's dropped like a rock. So much so that Friday it got oversold, and today we're oversold again. Now remember, just because it turns yellow, which means it's oversold or overbought, does not mean we're going to turn immediately. It's a warning that you should not be following it down with new short sales. You're going to be selling it right in the bottom. And if it's yellow on rallies, it's probably going to turn around and go back down again. Don't get sucked into a rally. A lot of people do. So I think it's about to turn back up. But the situation here is a long-term bear move. We have broke out into new low ground for a very long period of time. Today, we have new lows since, oh my, what is it? Since December of 20. All of 2021, all of 2022, and the first couple of months, of course, of this year so far. Over 2 years. We also caught the top of the market, which is impossible, some people say, of a whole series of limit up moves in the beginning of the war. Day after day after day, it went limit up, and sometimes it even opened and locked limit up. No movement whatsoever from an immediate limit up bid on the opening. But we have a bearish engulfing ER sell signal on the high day before it crashed back down. Thank goodness. Don't try that at home alone. So oversold at the moment. Good sell signal a few days ago, coming along just fine. Next chart. Platinum is a brand new today ER buy signal. The price has changed to green. We are at some support, not necessarily important from the signal point of view, but a nice added feature. But the fact that we have an oversold condition within the allotted amount of time and a little minor double bottom at the moment, plus the outside trading range, gives us a green price bar. I'd like to see it touch the green dot within the next 3 days, but ER1 is already long. And cocoa. I'm going to pass on cocoa. It got overbought. It's in a bull trend. I like the trend. These other charts, you can visually scan the time frame, looking for red and green, and see the buy signals and sell signals, which are frequently at the turning point of the market. Those are the trades people live for. Who cares if it's a scalp or a long-term position trade? You almost can't lose money, almost. Next. Well, nothing really here. Long-term bull trend. Nothing. Got a red way up in the upper left-hand corner on the top and a green in the middle at the bottom of a decent break and a beginning of a nice bull move. A few good signals in here. I want to comment about crude oil. If we, and I do think we're going to, start to make lows and a closing prices below 70.25, 70.10, we will have a major long-term downside breakout, and it will be very, very profoundly bearish. We got an excellent sell signal. It's not producing any huge move at this point on January 27th. Now we got an outstanding, at the top of the market, of course, June 14th sell signal, June 14th of 22, surrounded by a couple of other sell signals, one of which was a little premature. Then we got the top of the market to the day, and 3 days later, we got another sell signal that worked just fine. Next chart, a little overbought in cattle, leave it alone. Oversold now on silver, but that, well, that's about it. All I can say is it's probably about to turn back up. Oversold also in corn at support, probably going to have a short-term little rally. We're at support a couple of days ago with a not quite oversold, so I really don't have too much to say about heating oil, other than, like crude, if it drops below those two green dashed lines, you're going to have a major long-term bearish breakout. That'd be good for the stock market, probably. Coffee, no comment. No comment about sugar, except it's going crazy. A lot of volatility the last couple of days, and it's in a bull trend. Soybeans, a slow bull trend. Nothing to say except that. A buy signal didn't work quite right, and we're back to the E-mini. Thank you very much, Stan Ehrlich. You have a great trading day and a great trading week. Tomorrow's the last day of February.